Good morning. It is Saturday, February the 21st, 2026. And I want to start today by taking a step back and looking at the absolute reality of our current financial environment. If you turn on the mainstream financial news networks this morning, you're not going to see panic. You're not going to see traders running around screaming that the sky is falling. In fact, you will see the exact opposite. You'll see complacency. You will see anchors celebrating the fact that the stock market is near all-time highs. And they will tell you that the 98% of investors who are blindly holding index funds are doing the right thing. But we do things very differently here because we belong to the 2% club. We do not look at nominal numbers to make us feel good. We look at the structural health of the global financial system. We stay entirely calm and analytical, especially when the rest of the market is completely asleep at the wheel. Welcome to Money and Power. Now, before we dive into the specific metrics of this quiet underlying shift in the markets, I want to take a moment to say a very sincere thank you. I'd like to thank the people who've given tips for the weekly roundup because I've been gathering this data throughout the course of the week. Any money received will be used entirely to further the channel and to reach as many people as possible. I also wish to thank the numerous condolences given, and despite her elderly age, I am gradually overcoming the shock of her demise, which literally happened over a 2-day period and was completely out of the blue. Anyway, I'm on a mission here to help people within the financial arena. I'm not here to give financial advice, but to act as a shield to help prevent you from making the same mistakes the herd makes every single economic cycle. I want to be the ambassador of the 2% club and one who genuinely cares about your wealth preservation. I also have to highlight a remarkable trend we're seeing within this community. The data shows that WhatsApp and SMS text messages are currently driving 50% of my external traffic. This proves that our dark social growth strategy is working wonderfully. You're taking the information, bypassing the algorithm, and sharing it directly with the people you care about. That is how we spread the message of the 2% club. Please continue to do that because the contrast between what the headline numbers say and what the underlying commodities are doing have never been more extreme. So let's start by looking at the illusion of prosperity, which is currently taking place on Wall Street. As of Friday's close, the Dow Jones Industrial Average is sitting at an astonishing 49,626. The S&P 500 closed at 6,909, and the tech-heavy Nasdaq Composite finished the week at 25,013. When the 98% look at a Dow approaching 50,000 and a Nasdaq above 25,000, they feel incredibly wealthy. They feel safe. But what the 2% club understands is the concept of currency debasement. The stock market is not necessarily going up because the underlying companies are producing exponentially more value. The stock market is going up because the currency it is measured in is systematically losing its purchasing power. It's an inflationary melt up. And while it feels great on paper, it's a highly vulnerable position to be in if the liquidity suddenly dries up. So this brings us to the absolute reality of what is happening in the physical asset markets. This is where the smart money is positioning itself far away from the complacency of Wall Street. Gold is currently trading at exactly $5,109.17. I want you to really absorb that number, not necessarily the 17 cents. $5,109. There's no panic buying driving this. There are no retail investors frantically throwing their life savings at gold coins. This price level is being established by slow, methodical, relentless buying from central banks and sovereign wealth funds, which in the future I shall talk about. They're quietly exiting the US dollar system and taking physical delivery of the only Tier 1 reserve asset that carries zero counterparty risk. When gold establishes a floor above $5,000, while the stock market is simultaneously at all-time highs, it is a glaring warning sign that the institutional players do not trust the foundation of the financial system. Then we look at silver. Silver closed the week at a staggering $84.57. Just a few months ago, the mainstream analysts were telling you that silver was a dead trade. Yet here we are, completely validating the thesis of the 2% club. The industrial demand for silver, driven by the aggressive expansion of green energy infrastructure and advanced semiconductor manufacturing, is clashing violently with a structural deficit in mining supply. At $84.57, we're seeing the beginning of a true price discovery phase. The above-ground stockpiles are being drained, and the institutional investors who require silver for manufacturing are having to bid higher and higher to secure their physical supply. We must also analyse the broader commodities markets, specifically the industrial metals, because they tell us a completely different story than the tech stocks on the Nasdaq. Copper, which we closely monitor as Dr. Copper, due to its reliable indication of global economic health, is currently trading at $5.83 a pound. While this is a strong price historically, it's not exhibiting the same explosive breakout as silver. Why? Because copper is heavily tied to traditional infrastructure and global manufacturing, which is currently in a state of cautious hesitation. The recent Supreme Court ruling that struck down the sweeping reciprocal tariffs has created a massive wave of uncertainty regarding global trade flows. Manufacturers are temporarily pausing their expansion plans while they wait to see what the new rules of the game will be. Platinum is another critical metal we track, and it's quietly consolidating as well, largely because the automotive industry is in a transitional holding pattern. Let's now pivot to the currency markets. I'm going at a pace, I'm sorry, but I think you really need to know all of this. Because this is the engine, the currency markets, that drives everything else. The US dollar index, or the DXY, is currently sitting at exactly 97.79. This is a profound number. A dollar index falling below the 100 level, especially while the US economy is supposedly booming, is a major divergence. The dollar is weakening precisely because the international community is pricing in the reality of the Kevin Walsh era at the Federal Reserve, alongside the staggering trajectory of the US national debt. When the dollar weakens to 97.79, it acts as a massive tailwind for everything priced in dollars, which is exactly why we're seeing gold at 5,109 and silver at 84.57. Energy is another sector where the 98% are currently completely misreading the room. Look at the specific prices from Friday's close. WTI and the US crude benchmark is sitting at exactly $66.48 per barrel. Brent crude, the global standard, closed at $71.76. These prices are remarkably subdued. Of course, we're happy about that, but they are subdued. The average consumer sees gas prices stabilizing and assumes the inflation fight has been won. But the 2% club knows exactly why oil is sitting in the low 70s. It's entirely due to the geopolitical peace talks currently underway in Geneva. The market is pricing in the expectation that diplomatic agreements between the US, Iran, Russia and Ukraine will eventually flood the market with cheap, previously sanctioned energy. However, this is where the complacency is most dangerous. If those Geneva talks stall, or if the diplomatic negotiations collapse entirely, that relief premium will vanish overnight. The geopolitical risk premium will flood back into the energy markets, and we could see Brent crude spike violently back towards the triple digits. I'm not convinced that's going to happen, but it's a possibility. And if it does happen, the cost of transportation, manufacturing, and food production will surge, completely shattering the illusion that inflation is under control. The fact that the stock market is largely ignoring this risk is exactly why we maintain our defensive real asset posture. Because the market is currently existing in this strange state of calm complacency, while the underlying tectonic plates of the financial system are shifting so dramatically, I've realized that relying solely on a weekly YouTube video is no longer sufficient. When the dollar index drops a full point or when silver jumps $2 in a single trading session, you need to know about it immediately. You need the raw data and the strategic analysis before the mainstream media has time to spin the narrative. That is why I am launching the 2% Club newsletter blueprint. I shall be providing further details of this during the course of this week. So as we look ahead to this coming week, the agenda is packed with potential catalysts. We have the State of the Union address, where you can expect to hear endless rhetoric about the strength of the economy and the success of the stock market. Do not let the political theatre distract you from the math. We also have critical tech earnings coming up, which will test the very foundation of the 25,000 point Nasdaq. My guidance, as opposed to advice, remains the same. Stay calm. Do not buy into the complacency, but do not give in to panic either. Continue to act with the quiet confidence of the 2% club. Watch the dollar index at 97.79. Watch gold holding its ground at 5,109. Watch silver at 84.57. These numbers are the truth in a market full of noise. Thank you so much for your time today. Please, if you haven't done so, look at the videos on screen and recap what we've produced over the last week or so. Thank you for consistently sharing these videos on WhatsApp and SMS. You are the reason this community is thriving. Stay safe, stay rational. I'll see you in the next video.